On today's episode of the Cryptoverse, zero-fee Bitcoin trading moves from China to the UK. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. Today is the 24th of January 2017. So let's begin with the market roundup before we go to the news. The first part of the market roundup begins on coinmarketcap.com. We have Dash as the biggest loser of the day. Dash ranks as the 7th most capitalized coin and has shaved 4.07% of its value in the last 24 hours. Dash has had a decent run recently, so it's about time it took a little bit of a shave. Now that's on $2.2 million worth of trading volume. That's a reasonable amount looking at the top 20. It puts a Dash token at $14.46. Now the biggest winner of the day, we have, I'm going to call it Gollum because it's just funnier. Gollum has jumped 2 positions. I think it was 17th most capitalized coin just a couple of days ago. And it was in the biggest winner category. Well, I can't remember if it was yesterday or not. It just all blends into one for me. But anyway, they've jumped up to 15th place and gained 16.6% of their value. That's another 16.6% jump. And that puts a Gollum? Am I calling it Gollum now? I get confused. A Gollum at about 3 cents each. I'm quite enthused by this platform, to be honest. I still haven't played with the software like I said I was going to, but it's just in the queue of things to look into, right? It's just, that pile is absolutely bloody enormous. And people throw stuff at me all the time. Oh, look into this, look into that, look into the other. I'm like, okay, I can only put my attention on one thing at a time, just like all of us. So I have to be very, very selective about what I invest in. And of course, it's all brilliant, but I have to just pick one thing at a time to work on. So anyway, that is one thing I would like to get to look into, though. Before we get into the Bitcoin price chart, though, let's just check the mempool, which is the list of unconfirmed transactions on the Bitcoin network, because we had a massive traffic jam. From last night, it was about 9 p.m. when I realized what was happening, because I sent 3 transactions and they got stuck. And I was like, oh, it's been a while, 15 minutes, 30 minutes, an hour, and I didn't even get a single confirmation for any of them. So I was like, hey, what's going on here? Anyway, the confirmed transaction pool was about 60,000 at the time. And then this morning when I got up, it was about 70,000 and it was increasing even further. I was like, uh-oh, big problem here. But now that 70,000 has now dropped to 56,000. So the backlog is clearing. And I'm just looking at my phone here. The first transaction that I did at 8:45 p.m. last night has now gone through. It has now gone 3 confirmations, actually 17 confirmations, so that one's fine. The other 2, though, are still pending. One of them has 2 out of 3 confirmations, and the other one has 0. Oh no, that's the one from 20 past 9 last night, and it's now 11:30 a.m. the next morning. So I'm like, oh my goodness me. I mean, I'm no stiff when it comes to paying transaction fees either. This was a £30 transaction to buy a game on Steam, and I paid an 11 pence transaction fee. I know it's not in pence, but you know what I mean. It was a decent amount of fee. I let the wallet recommend the fee anyway, so that's what I always generally do. So, you know, these things happen, and it just reignites the scaling debate, so let it continue. In terms of the Bitcoin price chart then, we're looking at the dollar price, and it's kind of coincidental that we should be looking at it right now because the price is sitting right on $900. I'm talking about $900 dead. And this is that point I've been talking about recently. I did a shorter term Fibonacci retracement that intersects with this $900 mark. Same old thing. You know, 2 days ago we had that low test bar. It confirmed that 900 was support. There was no testing going on yesterday because the whole range is above $900. Today, we're doing a bit more testing. So the low of the day has gone down to 892. And right now, the closing price is sat right on it. So this is another test for the $900 mark. If it holds, then that would be the second confirmation that we are going to stay above 900. The first one would be that low test bar there. That would be the first test in this most recent round. Of course, forget all this. This is another thing about trading. I always give preference or priority or weighting to more recent prices. So if 900 succeeds in supporting the price today, to me, I would give that much more sway than something on a previous day, right? Because it's real time. So again, not just analysis for analysis' sake. And I don't give financial advice. I'm just doing this for educational purposes. But the question is, what do you do with this analysis? Well, what you do is that if 900 holds, $900.17 would be a pretty good buy, a buying opportunity, because that's about as low as it's going to go above support. 17 cents above the support line would be pretty safe, right? Because then, the worst case scenario, or second to worst case scenario, would be that it goes down to 900. You lose 17 cents on the Bitcoin, and then it would just bounce right off that and carry on going up. And of course, worst case scenario is that support breaks, which is not in line with the analysis, but not impossible. And then, of course, then you'd have to have some kind of contingency plan in place. However, moving averages, moving up, $900 support line, pretty good as far as I'm concerned. Over to the yuan chart. That thing I was talking about is continuing. I was talking about this sandwich that's going on here on the yuan chart. We've got 50-day moving average squeezing the low price against 6,500. It's actually not 6,500 exactly. It's a coincidence of my 38.2% Fibonacci retracement line, which is actually at 64.22. So I don't want to lump that together with 6,500, but I am going to, for the basis of this analysis. That ceiling of the sandwich, let's call it 6,500, right? And then the bottom of the sandwich is down there at the 50-day moving average, which today is sitting right at 61.10 to the Bitcoin. So that's increasing every day. Same again in terms of how one theoretically would trade this. You either sell it when it gets to 6,500 and bet that it's going to bounce off and go down again, or you wait for the buy signal, which would be a break of 6,500 and then a confirmation. A confirmation is where, it moves away from 6,500, comes back down, tests it, and 6,500 doesn't break. That would be confirmation. Then that would be the time to buy, theoretically speaking. And then you would rely on that 6,500 to protect you from losses. In terms of the news then, we have a new source, bitcoinist.com. This has been in my suite of tools that I use to analyze the news every day. It's just that usually one of my higher ranking outlets usually beats it to the punch. Whereas this one, I like the way this one is dealing with it, so I'm going to use it. So anyway, this here story is an example of the free market in action. If traders want zero fee trading, then some company will find a way to give it to them and give it to them profitably. So if you want to know how this is possible, then stick with me for this article. Let us begin, as always, with the red bit. The article says that given that an overwhelming majority of Bitcoin trading volumes come from China, the government has now turned its eye towards the cryptocurrency industry. And we have spoken about this in recent episodes, so this is not news to me. It's probably not news to you. So let's continue. Go to the orange bit further down. It says it is not clear whether these exchanges in China have complied with a direct request from the PBOC or under their own initiative. So that's the thing. There's been no major announcement to say that, yes, the PBOC have asked us to do this, take away zero fee trades and take away margin trading and whatnot. But they may be like, okay, let's get ahead of this so we don't get a slap on the wrist, right? So if the Chinese exchanges are playing on the safe side, that would be preferable, because if they get on the wrong side of a communist government, they'll no doubt regret it in short order. So moving on to the yellow bit, which is under the heading of margin trading and zero fees gone. It says, it is not clear if Bitcoin margin trading will be allowed in or will allowed back in after the new regulations are issued. But for now, all three of the major Chinese exchanges have halted margin loan services. And since then, trading volume in the country has decreased immensely. Now, the removal of margin trading significantly reduces the influence any individual trader can have on the price, since you can't leverage your money anymore. Meaning if you've only got 10 bitcoins, you can only trade 10 bitcoins. But here comes the interesting bit in the green. It says trading fees have also been implemented by all three exchanges, who now charge a 0.2% fee for every trade performed on the platform. Well, that's pretty in line with most other major exchanges. I think Kraken charge something like 0.15% and so on. So what's wrong with a zero fee trade? Well, there was speculation that traders, or even perhaps the exchanges themselves, were using software bots to trade rapidly in small amounts. And of course, when there is no fee on the trades, that kind of spam just doesn't cost you anything. Well, what's wrong with that, you say? Well, creating fake volume makes it look to the world as though there's more trading going on than there really is. And this is a kind of disinformation, since real traders are looking at volumes and order books across multiple exchanges in order to make trading decisions. So if the software bots are manipulating the data in this way, then traders are making ill-informed trading decisions, which could cause them to lose money, no matter how good their analysis was. So you could call that a form of data fraud. And the introduction of a bit of friction in terms of this small trading fee puts a price on this trade spam. And of course, those perpetrators are welcome to continue doing it. It's just a question of now whether they're willing to pay for it or not. But of course, this is not the end of the story either. Moving down to the bit in blue here, it says zero fees arrive in the UK. Interestingly, the UK-based exchange CoinFloor has recently moved in the opposite direction by removing all trading fees from its platform. Now, CoinFloor actually announced this on their blog on the 16th of January, which is now over a week ago. And many of you have posted comments on my previous videos asking, well, how does the exchange make money if they don't charge fees? Well, that's because they're only removing trading fees. They're still charging fees when money is deposited or withdrawn from the exchange. So let me show you what I'm talking about here. If I go to the CoinFloor website here, they have a page which lists all of their fees. So for example, let's just take British pounds. You have to deposit a minimum of £1,000, and then there's a deposit fee of £5. That's a fixed fee right there. Then when you want to withdraw, the minimum you can withdraw is £15, and the withdrawal fee is £10. So there we go. That's some money coming into CoinFloor. They get £5 when the money's deposited. They get £10 when it is withdrawn, no matter how much you deposit or withdraw. So that's fee number one. That's the deposit or withdrawal fee. That's to cover, like it says here, bank fees, right? However, that's not the end of it. There's also a percentage fee based on how much you deposit into CoinFloor. So, for example, if you deposit anywhere less than £10,000, then CoinFloor charge a fee of 0.38%, a one-time fee on that deposit. In real terms, what the hell does that mean? So, say if I deposited £9,000 with CoinFloor, well, that would incur that fee of 0.38%, which is £34.20 fee. So that's that on top of the deposit fee of £5, right? So that's that. Once you've got through all that though, and you've got your £9,000 in CoinFloor, you can trade backwards and forwards between Bitcoin as many times as you want for free. Then when you've made your profits or your losses or whatever, and you want to get your money out again, you make a withdrawal and then you incur another fee. So as long as you keep your money inside CoinFloor, then there's no fees and no friction going backwards and forwards. The question is, what kind of impact is this news going to have on China? Well, here I have a post from Reddit. This is someone who looks like they have got this data by querying the APIs for the various Chinese exchanges. And the bottom line here is that it says that trading volume has dropped by about 83%. Very interesting indeed. So in conclusion then, what do I think to all this? Well, I look at this in two ways. One, the UK is a more politically predictable place to host financial institutions that do zero-fee trading. But the other way to look at it is that London is still a place where financial institutions tend to push their luck when it comes to regulation. And even when they get caught doing bad things, they very rarely get punished for it. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.